The aim of this video is to explain the differences between investment solutions offering direct ownership and mutualized ownership of physical gold. Two of the most important risks for investors in this financial crisis when investing in gold are counterparty risk. This is the risk investors face when they hold their investment through an intermediary instead of directly. They are exposed to the risk of counterparty default and the risk of not really holding physical gold and the impossibility of verifying its existence. As regards counterparty risks, the failures of MF Global and Sentinel Asset Management are quite revealing. Both corporations were either selling gold paper certificates or gold stored within the banking system. But in both cases, investors were not the direct owners of their gold. Their gold was held by MF Global and Sentinel Asset Management. In both cases, investors didn't have access to their gold and couldn't verify it or take delivery of it in a timely manner. They were thus exposed to the risk of counterparty default and have fallen victims to those two companies. There are differences at many levels. By definition, mutualized ownership is a means of owning gold alongside other investors. The same bar is thus owned by many investors, each investor owning a part but not the whole bar. Direct ownership means an investor directly and totally owns a bar or ingot in his own name. In other words, an investor may either own a part of a gold bar or 100% of it. In the case of mutualized gold, storage certificates are issued in the form of a list including all the client's account numbers and a list of the gold bar's serial numbers. It is issued by the storage partner, thus it is global and not personally assigned. In the case of direct ownership, a unique storage certificate is issued for each client by the storage partner. It is unique, issued for each client, and it mentions precisely the client's first and last names as well as the serial numbers of the bars he owns. In one case, the storage certificate is global and not personally assigned, and in the other it is unique, personal, and it shows the exact identity of the client and the serial numbers of the bars he owns, which constitutes a full name ownership certificate. All companies offering mutualized or direct ownership have established partnerships with independent companies specialized in the secured storage of precious metals, generally outside the banking system. In the case of mutualized gold, the storage partner is only aware of the investor's client account number and of the serial number of the bar attached to that number. It does not directly know the identity of each client. And such companies offering mutualized gold ownership only have a single storage account in their name with the storage partner and a multitude of sub-accounts for each of the clients. The investor does not have a storage account open in his name with the storage partner. It's the company offering mutualized gold that stores gold in the name of its clients. In the case of direct ownership, the storage partner, because it issues itself a storage certificate and opens a storage account in the client's name, knows exactly each client's identity and knows precisely to whom belongs each gold bar. In this particular case, both the company offering direct ownership and its storage partner know the client's identity and the serial number of the bars he owns. In one case, the storage partner knows the client's exact identity, and in the other, the storage partner has a list of clients' account numbers but does not know the exact identity of the clients other than through the company offering the service. In the case of mutualized gold, it is generally more difficult, even impossible, to physically access one's gold. The mutualized gold provider's business model does not provide clients with easy access to their gold, and withdrawing one's physical gold usually entails stiff exit fees. With direct ownership, access to the storage warehouse is guaranteed. The storage partner knows the exact identity of the client and the serial numbers of his bars, since a personal storage account has been opened in the client's name. The storage partner thus has the legal obligation to authorize the client access to his gold stock, and furthermore, without the presence of any employee of the company offering this investment solution. Taking physical possession of the gold is legally guaranteed without any exit penalty fees, since the client is the direct owner of the bars. Owning mutualized gold is less costly than direct ownership, which can be explained by additional costs inherent to owning gold directly in one's name. For example, additional costs related to the secured delivery of bars and ingots for each client, handling fees applied to not only a single bar, as in the case of mutualized gold, but to each gold bar delivered on the client's account to the secured warehouses, fees for storage account opening on the client's behalf by the storage partner, issuance of a personal storage certificate, and so on. These two solutions that enable owning gold outside the banking system are for different investors' profiles. Each has its own advantages. Each investor must make his own choice depending on his investor profile. Short or long-term investor, costs involved, full ownership or mutualized ownership, guarantee of owning gold in his own name without any intermediary, direct access to the vault, possibility to take possession of the bars quickly, and liquidity of the investment.